Good morning, everyone. I would like to call this meeting to order, and I'd like to begin by acknowledging that we are in Treaty 1 territory and the traditional homeland of the Métis Nation. My name is Carrie Linklater. I'm the chairperson today, and I'm joined on the panel to my immediate left, Mr. Neil Harden, and my far left, Mr. Brent McIntyre. Our city assessor today is Mr. David Penner, and our admin secretary is Ms. Michelle Neefen. We will be hearing applications for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested have been described in each application, and we will limit discussion to those matters. The statements that applicants or the assessor make at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be advised that comparison of assessments of properties are not considered evidence of market value by the board. The board is appointed annually by City Council and is independent of it and the city administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note that the board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of Queen's Bench if the matter pertains to the application of exemption from taxation. Should you wish to appeal, information on how to do so will be included with the board's order. With respect to the hearing process, I will confirm the matters to be addressed with each applicant following the swearing in. We will then have the assessor's testimony followed by questions that the applicant may have, and then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they wish. Once all the evidence about an application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the board will deliberate in private and make its decisions. You will receive the order by registered mail as soon as possible. And as information, all public hearings are live streamed, recorded, and will be part of the public record.
Can you state your full name, please?
David Thomas George Penner.
Do you swear that the evidence you're about to give at this hearing should be the truth, the whole truth, and nothing but the truth, so help you God?
Yes, I do.
Douglas Becker.
Do you swear that the evidence you're about to give at this hearing should be the truth, the whole truth, and nothing but the truth, so help you God?
I do, thank you.
So, good morning, Mr. Becker.
Good morning.
And Mr. Penner, and I believe we are going to start off 3540 Pembina.
Thank you, Madam Chair. So this is file number 19-5039. The address is 3540 Pembina Highway, the St. Norbert Hotel. The business ID is 50979. This is the hotel business assessment, and it's done the same way that we do every hotel business assessment. That is, the starting point is the realty value, of which we take 10%, and to that we add the occupancy cost to determine the annual rental value. In this case, the market value in the realty is $3,400,000. 10% of that is $340,000. To that, we've added the occupancy costs, being heat, light, water, and air conditioning, totaling $37,380, to give us an annual rental value of $377,380, and we've rounded that to $377,340. My recommendation is to confirm the ARV at $377,340, and just to note that the realty was heard on this property, and it was confirmed by the Board of Revision at $3,400,000. So again, I'm asking the board to confirm the ARV at $377,340. Thank you.
Thank you.
I don't have any questions.
Okay, thank you. Questions?
I don't have any questions.
No questions.
I have no questions. Would you like to proceed, Mr.
Yes,
Becker?
okay. I did 35. They're not in any order.
Oh, they're not, okay.
I didn't know the order.
It's okay.
There you go.
This one.
Yeah. just ask the board to go to page 3. I just got a little blurb at the bottom there regarding the 2020 business assessment value. As Mr. Penner mentioned, that the hotels are done on an economic approach, which is 10% of the realty assessment, and then they add for the utility costs. Our position, the 2020 realty was heard, and the Board of Revision confirmed the value at $3,400,000. Our position at the 2020 realty assessment appeal was that the value should be reduced from $3,400,000 to $2,790,000, and the Board of Revision order was appealed further to the municipal board. Our position that our requested assessment is correct and should be used in our calculation of the 2020 business assessment. So on page 4, I've just taken, this is our workup from the Board of Revision hearing, where we, based on our stabilized expenses, came up with a value of $2,790,000. And then on page 5, based on a value of $2,790,000, we're suggesting an annual rental value of $316,320 rounded. And that's my presentation.
Thank you. Mr. Penner, did you have any questions?
Yes, Madam Chair. The realty value has been appealed to the municipal board, is that correct?
Yeah, I mentioned that on page 4, on page 3.
So you'll be arguing a change in the realty value at that venue?
Yes.
And should you get a reduction at that venue, would it be our practice to?
Normally you would carry it over, yes.
Okay, that's all my questions. Thank you.
Thank you. Mr. McIntyre?
I have no questions.
Mr. Hutton?
I have no questions.
And I have no questions. Thank you both for that.
$310.
We'll move on to $310.
Thank you, Madam Chair. So this is file number 19-5232. This property is 310 Donald Street. The business ID is 51400. And this is a hotel business assessment. Again, we're following the standard procedure that we do for all hotels, in that we take the assessed realty value and take 10% of that, adding costs to occupy to determine the ARV. In this case, the realty value is $10,277,000. To that, we added the occupancy costs of heat, light, water, and air conditioning, $222,999. The annual rental value determined is $1,250,699, or rounded $1,250,640. So it is our recommendation that we confirm the 2020 ARV at $1,250,640. And just to note, the realty value was not appealed and not challenged at the Board of Revision. That's my presentation. Thank you.
Just a couple of questions. So because the realty value wasn't challenged, you don't look at the business assessment at all to see if you feel it's fair or equitable?
Well, as I said, our starting point is the realty value, so we use the realty value in the loan.
Okay, but it's still a valid appeal though, correct?
Your appeal?
Yes.
Yes.
Yeah. Okay, I don't have any further questions.
Thank you. Mr. McIntyre?
I have no questions.
Mr. Harden? I do not have any questions at this time. If you'd like to proceed, Mr. Becker.
Can I get his brief?
Okay, if I could ask the board to turn to page 3. Again, under 2020 business assessment valuation. The second paragraph there, the 2020 realty assessment for the subject property is $10,277,000. Altus did not retain the owners as a client until November of 2019, and based on information from the assessor, the 2020 realty assessment was not appealed to the Board of Revision. So we did not start working for this client until November of 19, and we did not have them in order in time to appeal their realty assessment, and according to Mr. Penner, there was no other, appeals filed to the Board of Revision for the 2020 realty. So what we've done is we have the actual income and expense questionnaire sent in by the owner to the assessment department and a breakdown of the financials. And based on our evaluation, we feel that the realty assessment of $10,277,000 is excessive, and that it should be $6,238,000. So if you turn to page 4, here is our workup. Now what we've done is we've taken their December 31st, 2017 statements. We've entered everything into our program, and we come up with a value of $6,238,000. Now unfortunately I didn't include this, I meant to, I must have left it on the copy. The assessors, our net operating income after all is $660,505. The net income that was used by the assessment department was $1,088,111. Now the main difference between our workup and that of the assessors is, if I could ask you to turn to page 7. You notice on page 7 here, it's got all the income received and the expenses attributed to the income that was received. If you go right down on the left-hand side on the column, right near the bottom, there's underneath franchise, there's repair and maintenance and franchise fee. You'll see there's no expense there for franchise fee. Then other expenses, it shows $197,392. If you go a little farther up, you'll see under advertising and marketing is $409,843. Well, the $409,843 actually includes some franchise fee costs. But when the assessor did their valuation on it, they used a market parameter for an expense for the advertising. So they reduced their advertising, the actual, from $409,000 down to $167,000. So just a fraction of what the actual costs were. And they did not allow the other expenses of $197,392. So in essence, they overstated their net income by close to $400,000. So if I could ask the board to turn to page 12. Actually, I'm sorry, page 13. You'll notice on page 13 under sales and marketing evidence, it shows the total of $409,000. It's under it's all in French, but it's under current cumulative. That would be for the December 31st. It shows $409,843, and of that is a shared expense of $139,863, which is part of their franchise agreement. And then if we turn to page 14, you got under IT and communications, you have $197,393, which was entered on the mailer under the other expenses, which was disallowed. So because the advertising was cut back to $167,000 when it was actually $409, including the franchise fee, and then an additional $197 under other expenses was not allowed, the NOI for the realty assessment was grossly overstated, and therefore the value of $10,277,000 is excessive. So we're suggesting on page 5 that if you use the actual net income based on the parameters used for valuing hotels for assessment purposes, that the realty should be $6,238,000 at 10% is $623,800. We come up with an annual rental value rounded of $846,780. And while if we would have had the opportunity to appeal the realty, we probably would have. I'm not sure what the results would have been, but this is what we would have been seeking at that point. And therefore, because it wasn't appealed, it's not sitting at the municipal board, we're asking the board today to reduce the business annual rental value to $846,780.
Thank you. Mr. Any other questions?
Madam Chair, I would like to present rebuttal evidence.
Thanks.
May I speak to the rebuttal?
Yes, go ahead.
Thank you, Madam Chair. So, as you can see in my evidence, I don't have any realty evidence. The place to discuss realty values is at a realty board of revision hearing. In this case, the owners did not appeal or did not hire an agent to appeal. And we would assume that they felt that the assessed value was fair, otherwise they would appeal. This is a large hotel operator based out of Quebec, HAC General Partner Inc. So they would have a good idea of what their values are. The danger of coming to a BA hearing and debating the realty value is you may not get the whole story on the realty value. For example, Mr. Bedker alluded to an amount of marketing and suggested that we did not allow the full amount of marketing, when in fact what we did was we took that marketing amount and we allocated a portion of that marketing to A&G wages and benefits, and we also allocated a portion of it to A&G management wages. So in effect, we did allow the full amount, we just allocated to different categories. That's something that would be talked about in a realty hearing. So just touching on that. Now looking at my rebuttal evidence, this is a balance sheet provided to us by the owners, and in their notes, note 6 is their fixed assets. We can see they list their land value at $3,730,277 and the building value at $23,020,096. Also, there's a line on the first page there, revaluation, whereas they bumped up the value to end up with a value at the end of December of $4,055,000 for land and $24,377,750 for building. So if you look at the first line, it's either 4 million plus 4 million or 3.7 plus 23 million. Anyway, it appears that the company themselves is valuing their hotel in around 26 to 28 million dollars. Turning to the very next page, where note 6 continues, you see there's a note there that says reconciliation of the carrying amount. They note that had they measured this on an amortized cost basis, the carrying amount would be as follows: 3.7 million for the land, 22,268,989 for the building. So we can see clearly that the hotel's owners have a far higher value than 10,277,000 that we came up with on the income approach. That explains why they didn't bother to appeal the realty value. Clearly, if anything, we are too low. The other two pages just continue on with the note 6. At the bottom of the third page in my rebuttal, they talk about the measurement of fair value and how they undertake that. At the end of both 17 and 16, management performs evaluation of their land, building, furniture, and equipment. They note how they did their evaluation. And turning the page now to the very last page, the valuation techniques, cap rates, etc. So the company themselves have a value of this property. It's far in excess of the realty value that we have. It indicates that, if anything, our realty value is too low, although we're not here to talk about the realty value, as it wasn't in appeal. Because it was brought up by Mr. Bedker, I felt it was important to put forth this bit of evidence to show why the company would not have appealed this realty value. So we think the realty value is fair. If anything, it's low. Adding the cost, which is the way we do all the hotels, we should definitely confirm the ARV as is at 1,250,640. Thank you.
Can I ask questions in regards to this?
Yes.
Have you ever valued a hotel based on the accountant's set of books for depreciation purposes?
No, we use an income approach.
So this is really irrelevant, isn't it?
No, we think it is completely relevant. It goes to how the company themselves regard their property
Does
values.
this one also include a large parkade and an office building and some other restaurants?
I think this is just the hotel
Do
valuation.
you know that for sure?
Well, it is the hotel balance sheet and income statement, so.
But do you think do they not own because they're sitting on top of a restaurant, there's the Stantec building, it's all one parcel there, they have parking that they don't,
This would be anything that they own.
do you know if they own the other parts of the building?
It's under a different ownership group.
Do you know that?
Yeah, it's 310 Donald Inc.
So this amount here, do you know why they put this kind of amount in here? Like, just because, if something costs $10 million, do you think it's worth $10 million to somebody else to buy it?
Not necessarily.
Okay, because I've never seen this approach, Mr. Penner, you've
Well,
never ever
obviously,
used
we're
this
not
approach.
relying on this approach. We have an income approach at 10.2.
So,
So
but you're
we're
showing
not at
this,
23 million.
but you're showing this for some reason.
To show what the company views their value at and indicate why they didn't appeal.
Sorry, but you're assuming that somebody didn't appeal their hotel because of what their books say for depreciation purposes.
I would say they didn't appeal it because they thought the value was fair.
Why would you think that? A lot of people just
Why would
miss
they
the appeal
appeal?
date because they
This
didn't
is
know
a
that
big
they're.
hotel operator, Doug. This is a big
First
hotel
time in
operator, they know
Manitoba.
value. I would assume they would know the value of their hotel.
Well,
Anyway,
they've asked us to look at it because they feel it's excessive.
the business assessment.
Well, we'll be appealing the realty as well. We
And
missed
then
it.
we'll deal with the realty at that hearing, Doug.
If I was a tenant in a strip mall and the owner of the strip mall didn't appeal the realty, would you even look at the realty?
It's a different
But
situation.
you'd let me appeal it
completely.
though, right?
No, I'm welcome to discuss this appeal, but normally I would see your evidence 2 weeks ahead and be able to prepare properly for that. And that's why we do realty hearings and then BA hearings. This isn't the venue to discuss the realty.
Well, if you're using it as a starting point, it is. We had number 7 and number 9, I think it was Higgins the other day. Both their warehouse, their large elevators and stuff, done on the cost approach. For the business assessment, it was fought based on the income approach. The 10% of the realty never even entered, even though it was done on the cost approach or a different approach than, say, a realty.
Well, as I said in my comments, there are line items here that would require explanation as to why we stabilized at this or that number. As I said, we moved some numbers from marketing into other line items. Given a realty hearing, we would have full opportunity to explain that. We don't have the time to do that here. So we rely on the assessed realty value as we do with all other hotels. We believe it's fair and equitable. So we understand the right to appeal, and that's why we're here. That's why we're defending the value as it is.
You have looked at their financials over the past years?
Of course,
Have they ever exceeded 50% occupancy?
no. Because we
So
know
it doesn't matter what it costs
know
them?
their business model, we know that they don't discount their rates in favor of a higher average daily rate. So, yeah, we do look at all of that. And actually, this realty value is a bit down from 18, so we're already accounting for their actual financial return.
Well, if I look at their net income on their statements and our net income, you're not even close. You're at least 400,000 higher than what they're actually earning.
Well, we welcome the opportunity to defend that value at next year's board.
You have to stay working longer.
You do, as do I.
Okay, I have no other questions. I'd like to sum up though.
Yep, at the end?
Yeah.
Sure. Yep, thank you both. Panel, Mr. McIntyre?
I have no questions.
Okay, just, do you have questions of Mr. Becker for
No,
his
I have no
presentation? Okay, no? Mr. Harden?
No, I have no questions.
Okay, and I also have no questions on this. If you'd like to,
I'd just like to sum up basically.
yes, go ahead.
I don't think anybody can assume why the owner didn't appeal. If we would have been there, they would have been our client in May or June 2019, we would have appealed the realty assessment. But since the assessor relies on the realty assessment to develop their business assessment, we should have the opportunity to bring it up in evidence and to state that we feel it's excessive. And that's why we're presenting our appeal. And I've never ever seen a hotel done based on their book value. Because if you'll find, there's a lot of hotels in the city that, due to depreciation, their book value is gonna be lower than what somebody's gonna pay for it. That's my summation.
Okay, thank you. Mr. Penner, do you have a wish for summation?
Just to reiterate that we do all the hotels the same way, and that is we use the assessed realty value as our starting point, 10% plus cost to occupy. We're doing this one exactly the same way, and based on that, we would expect the value to be confirmed.
Okay. Well, thank you both. We're gonna move on to 1330 Pembina Highway.
Yes, thank you, Madam Chair. So this is Board of Revision file number 19-5586. Property is 1330 Pembina Highway. This is the Holiday Inn, Winnipeg South, and the business ID is 879. The value in the roll is $1,160,760. The value is derived in the same manner as for all other hotels. Our starting point is the assessed realty value, which is $7,875,000. Taking 10% of that and adding the cost to occupy being heat, light, water, and air conditioning, totaling $373,280, gives us a total of $1,160,780, or $1,160,760 rounded. My recommendation is to confirm the 2020 ARV at $1,160,760. I should note that the ARV already reflects the reduced realty value from the Board of Revision. That is, this one was heard early in the cycle, and the value was reduced to $7,875,000. Because it was heard early in the cycle and before we finalized our business assessment values, we were able to use that as our starting point, adjusted from what it was initially. And it already reflects the reduction from the Board of Revision realty value. So there's nothing left to do with this one, and we'd ask that it be confirmed at $1,160,760. Thank you.
Thank you.
And our position is to ask it to be confirmed.
Thank you.
Oh, you really want it. So I take it this is being appealed higher?
No, we didn't
No.
appeal it further.
Confirmed.
We agreed to the value at the Board of Revision, so we didn't appeal it any
Oh,
further.
okay.
And because it was carried forward already,
I was just wondering then why I was here. Okay.
We'll move on to Wellington Avenue.
Thank you, Madam Chair. This is Board of Revision, file number 19-5337. This is 1999 Wellington Avenue, the 4 Points Sheraton. Business ID is 29176, and the ARV is $1,511,820. Again, the valuation is done in the same manner as for all other hotels. The starting point being the assessed realty value. In this case, $12,949,000. Taking 10% of that and adding the cost to occupy. As noted there, are heat, light, water, and air conditioning. Those costs are $216,938. The annual rental value indicated is $1,511,838, or rounded, $1,511,820. So our recommendation is to confirm the 2020 ARV at $1,511,820. And again, in this case, the ARV already reflects the reduced realty value from the Board of Revision. It was heard early in the cycle, and we were able to adjust the business assessment before it went out. So 12,949,000 is the value that was determined by the Board of Revision, and thus is our starting point. So again, we ask for the ARV to be confirmed, as it already reflects the realty value. Thank you.
Thank you.
I have
And
no
Mr.
questions. No, no questions.
And you're not confirming?
No.
Okay, thank you. Questions?
I have no questions.
Mr. Harden?
No questions.
I have no questions.
Okay, if I can ask the board to turn to page 3. Mr. Penner is correct, the original assessment for the realty on this one was $13,688,000. And at the board, the assessor recommended a value of $12,949,000, which was used for their calculation of the annual rental value. But at the board, we were asking for a value of $11,791,000, and we appealed that Board of Revision decision further to the municipal board. On page 7, I won't go through the whole income approach, but this is where the assessor and ourselves differed at the Board of Revision. We had a slightly higher income, but we were higher expenses in the admin in general. Everything else was pretty similar, other than heat, light, and power. And we were using a 9%. All similar hotels to this, like the subject property, this is the 4 Points at the airport, receive a 9% cap rate, and the assessment department has given a 0.5 premium to the hotels at the airport. We were suggesting a 9 cap, so while it was reduced from $13,688,000 to $12,949,000, we were asking for a value of $11,464,000, and that's the number that we will be focused on, because we were actually asking for 11. I got the wrong number again. We ended up asking for $11,791,000. And based on that, if you turn to page 8, the $11,791 will be the number we'll be seeking at the municipal board. And based on that, we'd ask that the annual rental value be reduced from $1,511,820 to $1,396,020. That's my presentation.
Thank you, Mr. Bedker. Mr. Penner, questions?
Yes, Madam Chair. Mr. Bedker, just to confirm, the realty value has been appealed to the municipal board,
Yes.
and thus, if the realty value changes there, we'll have the opportunity to flow it through to the VA.
Right, well, we'll have to appeal it in order for it, if we don't get our number here, we would have to appeal it.
Right. Okay, thank you.
Mr. McIntyre, questions?
I have no questions.
Mr. Harden?
No questions.
I have no questions. Thank you. We'll move on to 2520 Portage.
Thank you, Madam Chair. The Board of Revision file number is 19-5335. The address is 2520 Portage Avenue. The business ID is 50423, and the value in the roll is $1,386,120. Again, with all the other hotel properties, the business assessment is done starting with the realty value and taking 10%, which we've done here. To that, adding cost to occupy, in this case $422,054, added to 10% of the realty of $964,100, gives us an ARV of $1,386,154, which we've rounded to $1,386,120. So we're asking the board to confirm the ARV for 2020 at $1,386,120. Just to note that the 2020 realty value was confirmed at the Board of Revision at $9,641,000. Thank you.
Thank you.
I have no
Questions? Mr. McIntyre?
I have no questions.
Mr. Harden?
No questions.
And I have no questions. If you'd like to.
Okay, at the bottom of page 3, As mentioned by Mr. Penner, the 2020 realty assessment was confirmed at the Board of Revision at $9,641,000. Our position at the Board of Revision was that the value should be $7,819,000, and we have appealed the Board of Revision order to the municipal board. Pages 4, 5, and 6 are basically our realty valuation, where we came up with the $7,819,000. The bottom of page 6, based on what we feel is a fair market value of $7,819,000. At 10% plus cost to occupy, we come up with a value of $1,203,900. So we request that the board reduce the current annual rental value from $1,386,120 to $1,203,900. That's my presentation.
Thank you. Questions, Mr. Penner?
Thank you, Madam Chair. So your realty work up here is the same one presented at the Board of Revision for realty?
Yes.
And based on this information and the assessment department's information, they confirmed the value?
Yes.
That's all my questions.
Thank you. Mr. McIntyre
I have no questions.
and Mr. Harden.
No questions.
And I have no questions on this, thank you. And we'll move on to Wellington Avenue.
Thank you, Madam Chair. So this is Board of Revision file number 19-5336. The property is 1979 Wellington Avenue, the Grand Winnipeg Airport Hotel. Business ID is 43941, and the 2020 business assessment is $1,301,220. As I've stated many times over, the starting point is the assessed realty value, which we take 10% and add the cost to occupy. In this case, heat, light, water, and air conditioning. Those costs add up to $174,636. Added to the $1,126,600 gives us an ARV of $1,301,236, or rounded $1,301,220. Again, we're asking that this ARV be confirmed at $1,301,220. Just a note that the realty was heard at the Board of Revision and confirmed at $11,266,000. So that's our starting point here. Based on that, we ask that the ARV be confirmed. Thank you.
Thank you. And Mr. Bedford?
No questions.
And Mr. McIntyre?
I have no questions.
Mr. Harden?
No questions.
I have no questions. Would you like to proceed, Mr. Bedford?
Yes, on page 3, as mentioned by Mr. Penner, the 2020 real assessment for the subject was $11,266,000 and was confirmed by the Board of Revision. At the Board of Revision hearing, Altus was asking for a value of $10,407,000, and we appealed the Board of Revision order to the municipal board. And if I could ask the board to turn to page 7. This was part of our presentation on the realty assessment. If you notice, starting at the top, our revenue, the one used by Altus and the assessor, we're within $1. Our departmental expenses are very close. Where our differences were is that we were lower on the A&G, the same on marketing, same on heat, light, and power. We had a higher repairs and maintenance. The assessor did not allow for a franchise fee where we did, and so our net income at the end of the day is, they were at $1,126,594, we were at $1,101,910. Again, the assessor's given it a premium cap of 8.5%. We're suggesting it should be the same as other full-service hotels at 9%, and using the 15% for FF&E deduction, we come up with a value of $10,406,000, and the assessment is $11,266,000. So based on our realty market value of $10,407,000 on page 8, at 10% plus the cost to occupy, we come up with a rounded annual rental value of $1,215,300. That's my submission.
Thank you. Questions, Mr. Penner?
I have no questions.
Mr. McIntyre?
I have no questions.
Mr. Harden?
No questions.
I have one question, Mr. Tanner, just because this is the third time this has been brought up. Why the, on the cap rate, why the 0.5%?
Well, there are,
Because of the airport location?
yeah, well, there's a few hotels that have an 8.5 cap, which we would consider to be luxury hotels, and/or hotels with a specific advantage, and being at the airport is often the first hotel of choice for many people, and would show in their performance and results. So a lot of factors going into it, but and this one is in particular a higher scale hotel. We would consider this a luxury hotel. So it has the advantage of the airport location and being a luxury hotel.
Okay, sorry then, that's just leading to another question for me. What denotes this as a luxury hotel?
Just the finishes and the services that they provide. I think they categorize themselves as a luxury hotel, so we're just agreeing with them.
Interesting, okay,
Can I have a follow-up question to that?
sure.
Okay, the one that we just did was the Grand Hotel, so that was built in 2014, I think. Yes, but the one before that, the 8.5, was built in 2000. So it was 18 years old as of the reference date, and you would consider that still a luxury hotel? It's just a.
Well, it has the advantage of being at the airport, which is their primary advantage. And also, as you're probably aware, of the significant amount of upgrades that they undertake on an ongoing basis.
They're also on leased land,
Doesn't impact the value.
but it could for a potential purchaser.
Not necessarily. We look at leasing as a form of financing, the same as mortgaging.
Okay, and mortgages over the past, say, 20 years or 18 years have gone down, right? Mortgage rates?
I can't really comment without looking at a table of rates.
But it's kind of generally known
Sure.
that they're a lot lower, but the land rates at the airport continuously increase.
But someone buying something outright, I mean, we're getting into a philosophical argument here now. If you own it outright or you're have a big mortgage on it, the value is the value, regardless of the ownership structure. So that's why that's not a factor in the value.
Okay, the Alt Hotel, right across from the MTS Center, it's got a 9% cap. That's a brand new hotel, supposed to have all the amenities and luxuries, it's made for the traveler, etc. It's a 9% cap. So there's a 0.5 point difference because this one's at the airport.
There's a lot of factors that go into it. Should we reopen the file?
Oh, just mentioning, I'm just asking. And could you name the other luxury hotels that are 8.5?
The Fairmont, the Radisson,
The Radisson downtown, the old North Star?
yeah.
Okay.
The Inn at the Forks, probably the Delta. Just off the top of my head.
Okay, that's all.
Okay. I thank you both.
Thank you.
Thank you.
Yes, no, I just didn't want Mr. Becker to do that, so I just put it to the end.
Thanks, David.
Oh, we need to deal with one more, right?
Yep, yes.
Thanks, guys.
Thank you.
Here's that.
See there.
So our first property, but our last, 1740 Ellis.
Right, okay, so this is Board of Revision file number 19-5017, 1740 Ellis Avenue. This is the Holiday Inn Winnipeg Airport Polo Park. Again, our methodology is the same as with all the others. The assessed realty value is $11,473,000. We take 10% of that and add the cost to occupy, $267,866. The annual rental value indicated is $1,415,168, or rounded $1,415,160. And we're asking that the ARV be confirmed at that value. And we also note that the realty value in this case wasn't appealed at the Board of Revision. So that is the value in the roll, unchallenged, and our starting point. And we ask that the ARV be confirmed.
Thank you. And there is no applicant here present.
So noted.
Thank you, Mr. Penner, for your time.
Thank you.
And this hearing is adjourned.